Stop what you are doing. We need to talk about an emergency signal flashing in the markets right now. While everyone is distracted fighting over whether Nvidia is overvalued or if the AI bubble is about to pop, a massive $17 billion transaction just happened quietly in the background. A deal that might have just crowned a new king in the AI infrastructure race. This isn't a speculation. This isn't a maybe. The ink is dry. Microsoft, the biggest company in the world, just handed a virtually unknown company the keys to the kingdom. The stock is Nebius Group, ticker NEBIS. And if you look at the chart, it looks like chaos. But if you look at the data, it looks like the opportunity of a lifetime. Today, I'm going to show you why the market has completely misunderstood this company, why they are being called the European hyperscaler, and the hidden complexity discount that might make this the most undervalued play in the entire AI sector. Now, before we pull back the curtain, remember, I am not a financial advisor. I'm just a guy on the internet who reads thousands of pages of boring financial documents so you don't have to. I am not telling you to buy or sell stock. This market is a casino, and the house usually wins. Only invest what you can afford to light on fire. Consider this video pure education and maybe a little bit of magic. Let's begin. To understand why this opportunity exists, we have to talk about a messy divorce. Until very recently, Nebius didn't exist. It was part of Yandex, often called the Google of Russia. But when the geopolitical situation exploded in 2022, the company faced an existential crisis. They had to split. And this wasn't a simple breakup. It was a complex, multi-billion-dollar restructuring that scared away almost every institutional investor on Wall Street. The toxic assets stayed in Russia, but the gold, the proprietary tech, the best engineers, and the massive international data centers was spun off into a new Dutch company, Nebius. This created what my research calls a complexity discount. Wall Street hates confusion. They see former Russian company and they run. They don't do the homework. But this discount is hiding the fundamental reality. Nebius isn't a startup. It is a pre-scaled technology titan operating with the speed of a startup. They aren't building from scratch. They are simply turning the lights back on. So, what does Nebius actually do? Why is Microsoft paying them? Think of the legacy cloud providers, Amazon AWS, Microsoft Azure, Google Cloud, like Walmart. They sell everything. You can buy groceries, tires, clothes, and electronics. Their warehouses are built to store everything for everyone. But the AI revolution doesn't need groceries. It needs high-performance jet fuel. Nebius is what we call a Neocloud. They are the specialized Formula One garage. They don't host websites for your local bakery. They do one thing. They build massive GPU supercomputers for training large language models. The legacy giants like Amazon and Microsoft are trying to retrofit their Walmart warehouses to handle these supercomputers, and it's messy, it's inefficient. Nebius was built specifically for this. They offer what's called GPU-native infrastructure, and right now, the world is starving for this specific type of infrastructure. And here is the proof. In September, Microsoft admitted they had a problem. They couldn't build AI infrastructure fast enough to keep up with OpenAI. So they looked around the market. They could have chosen anyone. They chose Nebius. Microsoft signed a deal worth up to $19.4 billion over 5 years to lease GPUs from Nebius. And just to prove it wasn't a fluke, Meta, Facebook, jumped in a month later with a $3 billion deal. Let's put that in perspective. This company, which many people think is a risky penny stock, has $20 billion in backlog revenue locked in from the two biggest tech companies on Earth. They are projecting an annualized revenue run rate of $7 to $9 billion by the end of 2026. For a company that was trading at a fraction of that valuation just months ago, the math is starting to break the models. They are sold out of capacity. Every GPU they plug in is already rented before it even turns on. Now look closely at this chart. This is the prestige. Competitors like CoreWeave are doing the exact same thing. CoreWeave was recently valued at over $46 billion. But Nebius, because of the Russian ghost in its closet, because of the name change, because of the complexity, it has been trading at a market cap significantly lower than that, around $15 to $20 billion, depending on the day. The market is pricing Nebius like a damaged legacy company, but the contracts tell us it is a top-tier US hyperscaler competitor. The magic here is arbitrage. You are buying a dollar bill for 50 cents because the dollar bill is crumpled and has a weird stamp on it. But Microsoft and Meta don't care about the stamp. They care that the dollar spends. And right now, Nebius is spending. So what am I doing? I am watching the execution. The risk here isn't the tech. The tech is proven. The risk is speed. Can they build the data centers in the US and Europe fast enough to fulfill that $17 billion Microsoft contract? They are building in Vineland, New Jersey right now. If they fail to build, the stock crumbles. But if they pull this off, if they become the European hyperscaler that connects the West's AI ambitions, then we are looking at a company that shouldn't be valued at $20 billion, but potentially $50 or $100 billion in the next few years. The whales, Microsoft and Meta, have already placed their bets. They aren't leaving. They are buying the infrastructure of the future. The only question left is, are you watching the fear or are you watching the data? Thanks for watching. Smash that like button for the YouTube algorithm. It really helps the channel out, and I'll see you in the next one.